and welcome to today's daily premium newsletter for April 17th. So, I did say today would be interesting, right? Most notably, we had a little pop-up in total market cap, a nice plateau throughout the day, and recently a sell-off to make us nearly even for the day. What's ideal is that the market volume was rising throughout the day, so this means that we're seeing true bull versus bears action, which is ideal for where the market is right now. So one of the more positive trends we're seeing, especially today, is how the cryptocurrency industry is poaching highly skilled individuals from both the financial services industry as well as the technology industry. Just today, CNBC reported that blockchain.com has hired former Goldman Sachs executive Brianne Madigan as the head of institutional sales and strategy. Now, having a former Goldman Sachs people shaping the future of crypto is nowhere on my scale of optimal, but it represents to us the slowly changing tide of things. No rational person leaves an executive position at something like Goldman, one of the most competitive businesses in the world, to join a startup unless there's real conviction and reason for doing so. This comes right after Galaxy Digital, founded and run by former Wall Street exec Michael Novogratz, hired Goldman Sachs executive Richard Kim as its new chief operating officer on April 10th. Matt Hogan, the CEO of Insight ETFs and a well-known face in the exchange-traded fund industry, left to join a cryptocurrency index fund manager known as Bitwise Asset Management in February. Amber Baldet, blockchain program lead at JP Morgan Chase, left the banking firm to start her own venture on April 2nd. Notice a trend here? So this supports what we've said multiple times, in that you want to be investing in whatever is at the intersection of Wall Street and Silicon Valley's interest. Not only that, but if the crypto industry is so compelling to high-profile members of both that they're willing to leave very lucrative and solid jobs, then maybe we have something here that most people aren't seeing. Certainly something to think about. What everyone did see in crypto today was Vergecoin's announcement of their new partnership with MindGeek, the leader in the online adult entertainment industry. This was the culmination of last month's fundraising campaign in order to reveal this partnership. The announcement essentially boiled down to how Verge would now be accepted as payment on many of MindGeek's adult entertainment websites. Now, I admit, we were very hard on Verge yesterday, and quite honestly, we were genuinely surprised that they didn't pull an exit scam like BitConnect and run away with the money. Being a payment solution for sites that have daily viewership in the millions is certainly good for Verge and crypto itself, and there's no denying that. But if you allow us to be skeptical here, like we like to do, there were many red flags leading up to this announcement. The lead developer promised that this partnership would change crypto forever, and while MindGeek is certainly a big flashy name, the simple truth is that they've accepted Bitcoin and other cryptocurrencies on many of their sites for years now. Once you begin to look past the headline, there's not much substance here. Now, we're speaking in hypotheticals here, but our educated guess as to what transpired here is that MindGeek received some or all of the 75 million Vergecoin that was raised in the fundraiser that had been requested from the Verge community for the continued development of the coin. That alone is pretty disingenuous. But once MindGeek sells all of that Verge, they'd have as much as 7 million USD as collateral to receive Verge payments without having to do anything outside of a little marketing that they did today. MindGeek receives some free advertising to hundreds of thousands of people that are in their target market, while the Verge team gets a very convenient pump to offload their personal Verge coins. After all, Verge is one of the most centralized coins out there. Of all the wallets for Verge, the top 100 own 80% of the total supply, up from 66% in December. Given that 90% of the maximum supply has already been released into circulation, that is extremely worrisome. Needless to say, we'll admit we had low expectations for Verge today, and they did impress in some respects. But this is by no means a partnership, as both of them want to indicate. Offering a coin as a payment solution is no partnership. It just sounds better. It's just like how Visa is not partnered with your local grocery store simply because you can use your credit card there. As we suspected, there was a massive sell-off in Verge today, which is a classic buy the rumor, sell the news. All in all, we hope you didn't get burned, as we advised you might be yesterday. Now, Verge is meant to be a privacy coin, but privacy does not mean security. I'm hosting a free webinar tomorrow to discuss some of the common and easy methods for better securing your cryptocurrency. Check out the sign-up link in the newsletter. One piece of news that is causing FUD today is a headline that read, New York Attorney General launches inquiry into 13 crypto exchanges. Now, that does sound ominous, but reading past the headline reveals a very different picture. Reading the actual press statement, it appears to us that it doesn't sound compulsory. Instead, it sounds more like a volunteer effort to improve transparency and protect New York's investors. Most importantly, it's not an investigation into illegality, but instead looks to be an effort to better understand cryptocurrency in order to better inform newcomers. That's exactly the sort of regulatory interaction we'd like to see from lawmakers who would be imposing new rules and regulations on cryptocurrency inevitably. Active compliance, helping to explain rather than obfuscate, and even helping to write the laws themselves will really put crypto into a much better position to seek mainstream acceptance and adoption. Another way we see that happening is that the governments of the world begin to actively use blockchain services and solutions in their infrastructure and project execution. One project that continues to give us hope of that dream is Walton Chain, who today confirmed that they were indeed part of the Alibaba Industry Alliance. The big takeaway here is the idea of smart cities. This is the integration of new technological solutions with existing infrastructure solutions. Imagine a world where automation coexists with us at even our most basic needs. For example, a public trash bin with RFID sensors to monitor the amount of waste. Should the waste ever hit a certain level, a robot would be dispatched to empty the bin and dispose of the waste. This is a very isolated example, and certainly having sensors and robots does not a smart city make. But the point is that by upgrading our living environments with cutting-edge technology, we stand to enter a new era of living standards and progress. This is why we bring up Walton Chain within this context. Internet of Things blockchain will be an integral backend to these applications. Specifically, this has to do with the most ambitious infrastructure project of the century, China's One Belt, One Road project. According to Wikipedia, it's a development strategy proposed by the Chinese government that focuses on connectivity and cooperation between Eurasian countries and China itself. What this means is that China is setting aside trillions of dollars in order to rapidly develop new infrastructure, logistics networks, and smart cities in order to massively improve trade and trade relations with the West. Think of it as a new Silk Road. So that's where we'll leave it for now. Needless to say, we see this as one of the best investment opportunities that has ever occurred, and blockchain solutions are in a unique position to be utilized in ways that would be extremely lucrative to you as an investor. Specifically, I look at Chinese-based IoT and platform blockchain solutions such as Walton Chain, VeChain, Neo, and Quantum as representing ideal candidates for government contracts and collaboration. Of them, I clearly like Neo and Walton, but new projects are getting started all the time, and I'm constantly looking to stay ahead of this trend. We'll continue to watch this develop, but we personally think it's a golden opportunity should one of these projects get tapped to help manage logistics or build the infrastructure to support the new smart cities being built alongside the One Belt, One Road project. All in all, it's a very exciting time to be in blockchain and to see the future literally being built as we speak. And now I'll turn it over to Doc. Have a great day, everyone. Hope you can attend the webinar tomorrow.
Hey folks, it's Doc for ReadySetCrypto. Starting out with Bitcoin tonight, we're starting to see, the second day of distribution here. Perhaps just another lower high setting up. As I look around the other coins, we're seeing kind of the same thing here. We're seeing this is Ethereum. Ethereum is also showing a couple of days of distribution here. There's about 40 minutes left in the trading day, and so far it looks like we're going to throw off a red candle here. Starting to see some volume perk up as we look around the different markets. Again, we're starting to see a little bit of selling, and it looks like perhaps another lower high is setting up, which is fine. This is exactly what this market needs. It needs to thrash out a bottom. We're also seeing the same thing with Bitcoin Cash, another lower high setting up. Now, some of these coins are actually getting into very constructive price action. So an example of this, and this is what I made mention in tonight's written section, is that if you're going to go long on something, if you're a trader, and not just a long-term buy and hold, but if you're actually a trader, look for something that's making higher highs and higher lows. So right now, EOS is a good example of something like this. IoT is another example of something that is started to make a higher high. You can see a higher high here. It's more than likely to put in a higher low next. Another one that looks good is Omisego. Omisego has now put in another higher high. The next low should be a higher low. Also, Substratum looks really strong right now. It's just put in a higher high. The next low should be, technically, probability speaking, a higher low. Notice also the volume here that we've had in Substratum. So I have not given this one really much time of day lately, but the price action is showing this nice rounded base here with a higher high and a lot of volume. So if you're going to be a trader, if you're more involved with short-term setups, perhaps swing trades or maybe a couple weeks in duration, then pick on something that's making higher highs and higher lows. It just makes sense not to try to catch the falling knife on something that's heading lower. Now, on the other hand, if you're a buy and hold type trader, if you're more interested in value, if you're more of a fundamental based trader, if you're going to look to lower your cost basis, if you have a very, very long time horizon behind your investing, then the current bear market is obviously a great opportunity for you. So how do you do something like that? Well, I would be a little bit more organized about how you actually buy the dips. So something that you can use is an oscillator for something like this. So we can simply go out, perhaps something like the RSI. So the RSI is going to show us on a relative strength index, standard old Wells-Wilder RSI. We can look and simply set up the rules such that we are going to add to the position if the RSI gets below 30, for example. So in this case, we would have been buying NEO on this dip in mid-March, and perhaps we would have added to that position again in the 1st of April. And so far, if we had done that, probably we'd still be ahead right now based on where the price is right now. If, for example, we were doing something with Bitcoin, we were trying to lower our cost basis with Bitcoin, then early February would have been a great time to buy that dip, even though that obviously the best positions that we're going to add in this type of market are going to be the ones that feel absolutely terrible to enter. And we may or may not have seen an actual dip at the end of March, early April, around that time frame. Perhaps this would have shown intraday, but right now the only signal that I'm seeing that's actually firing off on the RSI, or Relative Strength Index, is the 5th of February. But also we can use different types of indicators for this as well. Instead of the RSI, we could use something just, let's go out and get something simple out there, which is stochastics. So stochastics would work just fine for this type of situation. Okay, and then we can see that if you take this away here, just a simple stochastic cross where we have the blue line crossing above the red line would lead to potentially a buy signal. Again, in the oversold zone down here is where we want to look for that. So there would have been a couple of signals down here. You do have a little bit of positive divergence. There would have been another couple of signals down here. Again, these could be small adds to the position. And you can see that this study is a little bit more responsive than relative strength. Relative strength is a very, very stubborn, very slow moving study that rarely goes below 30 and rarely goes above 70. So in this case, if we had been adding positions, let's say we're adding positions here, we're adding positions here, we are adding positions perhaps here and here, and perhaps down there, you can see that we'd probably still be slightly underwater, but it's better than adding positions up here. It's better than adding positions up here. Chasing after FOMO moves is probably not a good idea, much like many people chased after this move back here back in December. So again, the point of tonight's video is depends on what your function is, depends on what your approach is, whether you're a trader or a longer term investor. Either way, you can use technical analysis to be able to increase your edge, but don't mix and match this. Don't make up your mind one day to be a value investor and all of a sudden when the price continues to go lower, all of a sudden insist that you're a trader, right? You have to have one approach to this, or you can have multiple approaches, but divvy up your capital separately. So make sure you keep that separation between church and state if you're going to trade like that. Thanks for listening, folks. We'll see you tomorrow.